For nearly 8 decades, the US dollar has reigned supreme as the undisputed king of global finance. It is the world's primary reserve currency, the dominant medium for international trade, and the default safe haven asset in times of crisis. This exorbitant privilege has granted the United States immense power, the ability to run large deficits, to sanction adversaries effectively, and to set the financial rules for the world. But now, a formidable coalition of nations is challenging this monetary monarchy. The BRICS alliance, Brazil, Russia, India, China, and South Africa, along with a growing list of new members like Saudi Arabia, Iran, and Egypt, is making a strategic and symbolic pivot. They are not just talking about de-dollarization. They are actively building an alternative system, and at the heart of this financial insurgency lies a very old asset: gold. This is not a story of a sudden, dramatic collapse of the dollar. It is a story of a deliberate, patient, and multi-pronged strategy to erode its dominance. The BRICS nations are betting on gold as the cornerstone of a new financial order, and their motivations are rooted in geopolitics, economics, and a deep-seated desire for sovereignty. To understand the BRICS bet on gold, one must first understand why they are so determined to move away from the dollar. Their grievances are not merely philosophical. They are practical and have been forged in the fires of recent geopolitical and economic events. The most powerful catalyst has been the weaponization of the dollar. The vast, interconnected system of global dollar payments, centered on institutions like SWIFT and controlled by U.S. regulators, has become a primary tool of foreign policy. When the United States and its allies imposed unprecedented sanctions on Russia, freezing hundreds of billions of dollars of its central bank reserves and cutting its banks off from the global financial system, it sent a seismic shockwave through capitals around the world, particularly Beijing, Riyadh, and New Delhi. Dr. Li Wei, geopolitical analyst, Shanghai. The sanctions against Russia were a watershed moment. It demonstrated, with absolute clarity, that any nation that holds its reserves in dollars or conducts trade in dollars is potentially vulnerable to U.S. coercion. For China, for Saudi Arabia, for India, this was a wake-up call. It revealed that the infrastructure of the global financial system is not neutral. It can be switched off. This created an urgent strategic imperative to build parallel systems that are beyond Washington's reach. Beyond the immediate shock of sanctions, there is a profound discontent with the inherent instability of the dollar-centric system. BRICS nations argue that the Federal Reserve, as the de facto central bank of the world, sets monetary policy primarily for the benefit of the U.S. economy. When the Fed embarks on periods of quantitative easing, printing dollars, it floods the world with cheap capital, causing asset bubbles and inflation in emerging markets. Conversely, when the Fed raises interest rates to combat inflation at home, as it has done aggressively, it triggers capital flight from those same emerging markets, causing their currencies to plummet and making their dollar-denominated debt exponentially more expensive to repay. Samuel Adebayo, economist, Lagos. We in the global south are trapped in a cycle not of our making. The Fed's decisions on interest rates are like a tidal wave that crashes on our shores, regardless of our local economic conditions. A strong dollar means higher food and energy import bills for us. It means our national budgets are crippled by debt servicing costs. It is a system of financial volatility imposed from the outside. Finally, there is the simple matter of a shifting balance of power. In 2000, the BRICS economies accounted for about 8% of global GDP. Today, they account for nearly one-third, and their share is rising. They are major exporters of commodities, manufacturers of goods, and home to billions of consumers. They argue that a global financial architecture designed in 1944 at Bretton Woods no longer reflects the economic reality of the 21st century. Their accumulation of gold is a tangible manifestation of their demand for a seat at the table, or more accurately, their intention to build a new table altogether. The grievances have translated into action. The most visible and significant signal of the BRICS strategy has been a historic, coordinated accumulation of gold by their central banks. This is not speculative buying by hedge funds. It is a strategic, long-term repositioning of national balance sheets. For years, the world's central banks have been net buyers of gold, but the scale and consistency of purchases by BRICS nations and their allies are staggering. China, which is notoriously secretive about its gold holdings, has been steadily adding to its reserves for 16 consecutive months. While its official figures are around 200 tons. Many analysts believe the true figure, including gold held in other state entities, is far higher, potentially positioning it as one of the world's largest holders, rivaling the United States and Germany. But China is not alone. Russia, in the face of sanctions, has explicitly declared a policy of de-dollarization. It has been buying gold for years and now considers gold and the Chinese yuan as the primary pillars of its national wealth fund. Poland, a NATO member but with similar strategic concerns, has been on a massive buying spree, as have Singapore, Turkey, and India. In 2022 and 2023, central bank gold buying hit multi-decade highs, a trend that has continued unabated into 2024. Why gold? Why this ancient metal in a digital age? The reasons are multifaceted and speak to gold's unique properties. First, sovereignty and neutrality. Gold is a tangible physical asset. It is not an IOU from another government. It is not created by a central bank and cannot be digitally frozen or confiscated in the way dollar reserves can be. When Russia's dollar reserves were frozen, its physical gold bullion, stored securely within its own borders, remained entirely under its control. For nations seeking to insulate themselves from geopolitical risk, gold represents the ultimate form of financial sovereignty. It is an asset that is beyond the reach of any other nation's political whims. Second, trust and intrinsic value. The US dollar is a fiat currency. Its value is based on the full faith and credit of the US government. The BRICS nations, witnessing the massive expansion of the US national debt and the money supply, are expressing a vote of no confidence in this system. Gold, by contrast, requires no such faith. It has been a store of value for thousands of years. It cannot be printed into existence. In a world of escalating debt and monetary experimentation, gold represents a timeless, apolitical, and trusted anchor. Third, diversification. For decades, the U.S. Treasury bond was considered the world's safest asset. Central banks piled into it. The BRICS gold buying spree is a direct diversification away from this concentration of risk. They are reducing their exposure to U.S. and U.S. interest rate risk and rebalancing their reserves into an asset that has historically held its value during periods of high inflation and geopolitical turmoil, precisely the conditions we see today. Accumulating gold is the foundational step, but it is only one part of a broader architectural project. Gold provides the bedrock. The BRICS alliance is now focused on building the institutional pillars of a parallel financial system on top of it. The first pillar is the creation of new trade settlement mechanisms. The goal is to bypass the dollar entirely in bilateral trade. We are already seeing this happen. China and Russia now conduct over 80% of their trade in their own currencies, the yuan and the ruble. India has agreed to pay for Russian oil in UAE dirhams and Indian rupees. Brazil and China have established a settlement system to conduct their vast trade in commodities and manufactured goods directly in yuan and reais. The second, and more ambitious, pillar is the development of a new reserve asset. While gold is the ultimate backing, daily transactions require a liquid, tradable currency or asset. Here, the Chinese yuan is the clear frontrunner. By promoting the international use of the yuan and by encouraging its inclusion in other countries' reserve baskets, China is positioning its currency as a potential rival to the dollar. However, the yuan is not yet fully convertible, and China's capital controls remain a significant hurdle. This is where gold plays another crucial role. There are persistent reports and discussions within BRICS circles about the creation of a new gold-backed digital currency. The concept is revolutionary, a common trade and reserve currency for the BRICS Plus bloc, backed not by the promise of a single government, but by the tangible pooled gold reserves of its member states. Such a currency would combine the stability and trust of the gold standard with the efficiency of digital payments. It would be a direct challenge to both the dollar's dominance and the potential future dominance of a US-centric digital currency. Priya Sharma, financial technology expert, Mumbai. A BRICS gold-backed digital token is the holy grail of their de-dollarization strategy. It would allow for the settlement of trade between, say, Saudi Arabia and South Africa or Iran and Brazil, without ever touching the dollar or the SWIFT system. It would be a currency born of the 21st century, yet backed by the oldest and most trusted form of money. The technical and political challenges are immense, but the fact that it is being seriously discussed at the highest levels tells you everything about their long-term intent. The final pillar is expansion. The more members the BRICS plus bloc has, the more internal trade it can conduct in its own system, and the less reliant it becomes on the dollar-based West. The addition of major commodity producers like Saudi Arabia, the UAE, and Iran is a game-changer. It creates a closed-loop system. Energy producers sell oil and gas for yuan or a gold-backed token, and use those proceeds to buy manufactured goods from China and India, and food from Brazil. This internal economic gravity reduces the need for the dollar as an intermediary. The BRICS bet on gold is therefore more than a financial trade. It is a geopolitical statement. It is a declaration that the era of a single Western-dominated financial order is drawing to a close. They are not just buying gold bars. They are buying insurance against geopolitical risk, asserting their economic sovereignty, and laying the foundation for a new balance of power in the world. The Golden Gambit is underway, and its success or failure will shape the course of the 21st century.